This is News Talk 980 CKNW.
We had a failed Turkish coup, an Italian bank crisis, a Brexit vote, and social violence in the U.S., but none of this has really been enough to really stop the TSX. It hit its highest level in 11 months, while the Dow Jones and S&P hit all-time highs as well. So what gives here? Let's bring in Michael Campbell, the guy that knows, host of Canada's top-rated financial show, Linda. Money Talks.
Oh, yeah, Michael, we've talked before. The world is upside down. We've got a long list of negatives, including the two U.S. presidential candidates opposing free trade and then the continued downgrading of sovereign debt. Yet the markets don't really seem to notice here.
Yeah, we're talking North America markets when we say that. You know, the credit thing, though, you're mentioning, Linda, think about that. In the first half of 2016, more government debt was downgraded at any time since that big crash in 2009. First 6 months, 24 governments downgraded by Moody's. Standard & Poor's not quite as aggressive, 16, and Fitch 14. Here's the message, though. The big problem's in government and government debt. And that's where the bad news is going to hit. The private sector has been getting their balance sheets together really since the credit problem, while governments, as we know, have been increasingly into debt. And the point is that the private companies aren't in trouble. It's government. And here's the other thing we got to keep in mind. The money's got to go somewhere from big pools of capital, whether it's a pension fund or, other big pools. It's got to end up somewhere. And my thesis for a number of years has been that money would move out of Europe to North America as the EU's financial and economic problems became more obvious. I think that started to happen. Plus, we got to remember, come on, $13 trillion U.S. in negative yield bonds. It's not surprising that somebody wants to go elsewhere.
Yeah.
And I think North America is the destination, relatively speaking, even the Toronto stock market, more noticeably in the S&P and the Dow Jones.
Michael, a lot of big-name investors, in fact, I was watching BNN this morning, one big-name investor says, look, this is not the market for amateur investors. They've been warning of major problems in the U.S. stock market. Are these big-name investors, are they wrong here on this?
Well, this is just a short-term move, and I think longer-term, what they're really worried about is the debt problems we were just talking about. They don't think this is going to end happily. And, I mean, right now, they're trying to figure out what the heck to do with the Italian banking system. There's a big problem there, and it starts with the politics. In Italy, you got to remember that the shareholders of those banks are usually kind of individuals like us, very different from other models. So if they force a bail-in, that means the bank itself and the creditors and the shareholders and the depositors all pay the price. I think that'll spell the end of the Italian government. If you go to the other side, though, and the EU bails them out, like they did in Greece and stuff, I can tell you, I think that may spell the end of Merkel being in Germany. The Germans are darn tired of that. So this is really something, and I think what these big-time investors are saying is longer term, there's too many negatives, and we better proceed with real caution.
Okay, so forget the big-time investors. Let's talk about the little guy like me and Drex, right? Where do we keep our money? Should it be in savings accounts? I mean, it's crazy. You're only getting 1% interest.
You're absolutely right. I think that's the dilemma people face. But the first thing is you can't, if you don't want to get that 1% or less, as you say, I think you've got to first establish what kind of risk is appropriate for you. I've learned that the hard way, by the way. I mean, boy, some of those mistakes I've made investing, and it gives you a clear scorecard. My goodness, it's been painful. So I had to learn what my emotional risk tolerance was, and then, of course, my financial risk tolerance. Mm-hmm. So I'd start with that. How you manage your risk is going to be key. I think there are other things to do. I think if you look at quality companies that pay a nice little dividend, say 3-4%, maybe with a potential small growth there, that may be an alternative for people. Clearly, they're choosing real estate in other areas. They did in Vancouver. Now they moved into Victoria and Kelowna, et cetera. That may also be a thing. But the key thing is, we've got to be careful about the debt we take. It's my biggest worry that people get out of those really secure, very low interest paying investments, but get in over their head. You got to know what risk you're taking.
Mm-hmm. We've heard a lot about bubbles bursting in the housing market here in Vancouver and in Toronto. In fact, you and I have spoken about this a couple of times. Yeah. Mark Cahodes has claimed that burst could be anywhere between 50 or 80%. We had another real estate expert on just this week saying, it's going to be more like maybe 20%, maybe less. You got worry there still?
Well, let's keep in mind we've been hearing exactly those kind of predictions since 2012. I've done a ton of stuff on actually saying I didn't think that was true in 2012, 13, 14, 15. Think about that. Major organizations. But the key is this. They're talking about a bubble in prices. The real problem is if it's a bubble in debt. Debt is the real variable there. The good news is I think about half homeowners in British Columbia actually don't have a mortgage. I think they're not subject to that kind of panic liquidation, but absolutely be clear. It won't be because of prices. It will be because they can't afford the debt. And another side of that is I suspect, and I don't have the figures for it because nobody does, but the upper end of that market, this big money we've seen Chinese investors want to move their money. Their key was they wanted money out of China. They didn't trust the Chinese situation, Chinese government. So it was kind of like moving your bank. So they moved it. They believe in real estate. I doubt much of that was done on mortgages. I would think it would just be a cash transaction to get the money out. So that's not subject to a downturn. The subject to a downturn will be if you can't afford your mortgage. And as I say, half the people don't even have one. So I'm not looking for some big correction. I think instead you'll get some languishing. A market slowdown is obvious. I think we might be there. And for Money Talks for over a month, we said we might be there at this point. But I don't know whether it's a summer doldrums or whether it's something more serious. But again, so individuals, watch your mortgage. Make sure you can afford any changes to the market. If you get a little rise in interest rates, that'll be the key to the size of the correction.
Oh, yeah, that's great advice. All right, thanks for joining us, Michael Campbell.
Okay, thank you both.
Always interesting to talk to Michael Campbell. I learned something new. I often feel a little bit depressed. I said, Michael, it must be tough to be you because ignorance is bliss often,
Yeah.
And he's aware of all the poop that's coming down the pipe.
He's aware, and you know what? And when we say it's, CKNW's highest rated, blah, 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 it's true because people tune in droves on Saturdays to hear what Campbell has to say. Whether you like Campbell or not, he's always got something to add to the fire. And you know what? I like to listen to this guy because I think he's a litmus test of what's going on around us.
Oh, yeah, absolutely. Smart guy.
Vancouver's News, Vancouver's Talk. This is News Talk 980, CKNW.